Hey guys, Stock Saturday, and it's been a slightly red week for me, green week for the market from the looks of it. I'm down about 4.5%. This is mainly sort of the interactive brokers side, and yeah, the market seems to be sort of fairly happy. 1.56% for the S&P for the week, and Nasdaq was 1.95%. So this was largely off the rate cut, the 50 basis points from the FOMC, which I will come back to. But yeah, a portfolio sort of some stocks liking this, TSMC, Broadcom, your sort of big US stuff, and then things with a lot of debt is sort of liking this reasonably well. But I've had a few fallers. Glencore still sort of on the chopping block for me, but yeah, they're not doing too well. Stellantis still hovering around low prices. I do want to see the Q3 revenue and deliveries sort of before I know really what to think of Stellantis, but we'll see. So we're in that quiet period of not a lot of earnings, but there was some news. CleanSpark still carrying on with their purchasing very, very small sites they've got two sites in Mississippi and a second in Wyoming. Um, these have a combined purchase price of 5.7 million for the two Mississippi ones and a total of 16.5 megawatts. So what is fairly nice is that they're sort of turnkey ready, as they call them. Expected completion date of December the 1st, and they do already have the miners to put in them. So yeah, and these are S21 Pros, which is pretty good. They CleanSpark are getting the very latest machines. But yeah, 5.7 million for these sort of tiny little facilities. Um, they're saying combined operating hash rate of 1 exahash between these two sites. So, you got sort of Riot doing like 30, 35 exahash sites and CleanSpark doing one between two sites. But there you go. And Wyoming, their sort of previously announced one on the September the 11th. This is expected to contribute 3 exahash, so is a little bit larger. And they're putting S21 XPs, the immersion ones, in there. So these are the very, very latest machines. Are getting a hell of a lot out of Bitmain. Sort of the S21 standards are already getting a little bit old almost. They've got the Pro and the XP both sort of above those now. So yeah, it's not ideal. I'm sure this will mean sort of difficulty increasing over time. Obviously, CleanSpark they've said before, they're targeting 37 exahash by the end of the year, so that's adding sort of close to 15, 13 from here, and they want to get to 50 in 2025. You've got Marathon, Riot, and everyone sort of expanding a great deal until then. And we've got other news of we've had Bhutan mining, we've had Russia made it quite clear that they're mining, and we had the Japan news. They're sort of mining with surplus energy, and I do think that is sort of a bit of a warning to the public miners who have to pay for their electricity. So we'll see, but yeah, for the next year, I still think this looks good. So looking at the Fed, we'll sort of dive into their summary of economic projections. So they cut rates by 0.5%, as sort of everyone knows, but a lot of people don't really look into the numbers that they provide. So they sort of give their estimates of GDP, unemployment, inflation, and that sort of thing. They have kept GDP exactly the same. I think this is their way of saying that they have no idea. 2% every year dead, and then longer run 1.8%. But yeah, it's not going to grow exactly 2% in the next 4 years. June prediction, admittedly, they had 2.1 for this year. Unemployment, though, they have rose quite a bit. because it's above where they were saying already. So their June prediction was 4% for this year. They've raised that to 4.4. And next year they were predicting 4.2. They've also raised that to 4.4. I do see a lot of people thinking that is the peak. They're saying that, the Fed are saying unemployment will peak at 4.4%. I mean, they are saying that's the median of the Federal Reserve Bank presidents, and I believe this is the end of the year. So they're not saying the peak. It could get to 4.4%. It's the end of this year, spike up to 5%, 5.5% in sort of early 2025, and then come back down again to 4.4 at the end of 2025. And that would be in line with this. Correct me if I'm wrong, but if this is end of the year, or end of each respective year, then they're not saying it's going to peak at these numbers. But we'll have to see. And then again, they just drop it 4.3%, 4.2%, and longer run 4.2% as well. So it does seem like they're saying 4.2% is sort of a healthy unemployment rate. If you look into the past, it's been around here or maybe a bit higher. We were sort of almost artificially low at 3. I think it bottomed at 3.4%. So yeah, they're saying sort of 4.4, 4.2% isn't really too much of an issue. Inflation as well, they've brought down quite a bit. They had 2.6% PCE and 2.8% core PCE for this year. They brought that down 2.6 and 2.3. They brought next year's down slightly. And then again, this sort of 2% dead random, arbitrary figure, which I would see as them saying they've got no idea. And yeah, Fed funds rate projections they had at 5.1%, have dropped that to 4.4, which is quite a big drop. And next year they had 4.1, they've dropped that to 3.4. And yeah, longer run, everyone's sort of making a big thing of, which I think is a reasonably big thing. They've raised the sort of longer run neutral rate, as sort of some people call it, from 2.8 to 2.9%. So yeah, they see this as sort of not restrictive or easing. So 2.9%. Do still think this is fairly bad for bonds, sort of medium term, even longer term. You got the sort of long 10, 20 and 30 year bonds. You would expect when things return to a bit more normal, should be above this Fed funds rate. And yeah, they're already at sort of 3.6, 3.7%. So if Fed funds rate is 2.9, your sort of short-term rates, 1 and 2 years should be around this, and then you have a steep, not a steep yield curve, a fairly shallow yield curve upwards towards the longer durations. 5 years can be 3.1%, say 10 years can be 3.3, and then sort of longer terms are higher rates for you sort of taking that risk of putting your money up for longer times. So the sort of 10, 20 and 30 years aren't too far off where you'd expect them to be longer term, unless we get a hell of a recession, and it just doesn't seem like we're getting that. And my favourite bit is always the dot plot. So you have the overall number that they're predicting, but this is the individual members. We did have sort of Captain Bearish, as I was calling him. Does seem to have largely capitulated. I'm guessing he's sort of the top one here. But yeah, it was sort of at like 5.5% end of next year projection for them. And yeah, that's come down to sort of one person at 4.25% end of next year, but everyone else is 4% or below. And obviously this year they're sort of all clustered around this 4.5, 4.75. But then, yeah, it's sort of fairly spread out over the sort of next couple of years as it is, but I think they've got a little bit tighter. You sort of had some, hanging out the bottom here and some coming up the top with Captain Bearish. So they've all sort of clustered around this 2.5% to 4% longer term rate. So I have been looking at Baidu and Alibaba, just sort of reassessing whether I still want to hold them in the Interactive Brokers account. I have the Hong Kong shares in there just as a little bit more protection than holding the ADRs, and yeah, I've sort of been weighing up whether to sell these off and maybe put that into options. Sort of obviously with the Chinese recession sort of appearing to be getting even worse, but they seem like they would be, or they are being fairly quick to provide stimulus, and stimulus generally would push the tech stocks up. And so yeah, Baidu and Tencent, Alibaba, people like that would be the first to rise off sort of any stimulus. But yeah, I still think China doesn't exactly look great. And yeah, looking at sort of financials of these, it's sort of still reasonably good value, I suppose. Baidu's is sort of always all over the place. It was 22 billion. I think this is Chinese yuan, where the listing is actually in Hong Kong dollars. There's a small difference between the two currencies, but sort of broadly you can use Chinese yuan. So yeah, 22 billion down to 9.8, down to 7, and then up to 19.5 last sort of 12 months after this little rocky period. So yeah, 20 billion in net income, 27 billion in EBITDA. Again, that's sort of all over the place, but fairly high, off a market cap of 239 billion. So you can look at this in US dollars, but I sort of think just easier to look at it in sort of what is near enough Chinese yuan. And obviously they still have the very large balance sheet. So sort of covered their earnings a little while ago, and that sort of looks fairly good. And yeah, assets wise, they still look pretty solid as well. 150 billion and sort of debt of 82 billion. So they have got a fair bit of debt, but the cash pile is obviously fairly large. So that's sort of about 70 billion Chinese yuan. So 70 billion net cash pile. They don't take the short-term bonds, I don't think, into account. So they do actually show net debt, but I would call it net cash. So yeah, 70 billion in net cash. Potentially some of that to be, depends how much you want to knock off 239 billion. And yeah, against sort of forward earnings, you're looking at $85 share price against sort of closing on $11 and sort of $11.70 next year. So again, if you knock sort of 10%, 15% maybe off this share price for the net cash pile, yeah, you're looking at sort of 6-7 times earnings. So it's obviously fairly cheap, but where's the catalyst to actually make this stop being cheap? It's been cheap for years, and not sure I really see anything. China sort of in a recession. As I say, you have the printing, but I don't think it's suddenly going to make people want to invest in China. Share price might rise a bit off the back of stimulus, but I'm not really sure that's something I see as a bull case that I really want to hold. So yeah, that's basically Baidu. Alibaba looks sort of very similar, cash wise and earnings wise. So compared to the sort of opportunity that I'm sure you're aware I see in the options for the next year, I've got sort of 4,000 in between these two, Alibaba and Baidu, and I think that may be going. So we'll see, but I just thought I'd have a quick review on financials. So we had quite a bit of other economic news aside from the FOMC. You sort of had retail sales in the US looking sort of near enough as expected. Some a little bit stronger, some a little bit weaker. Again, I would sort of look at core, sort of try to look at core everything really. Normal retail sales can be a bit choppy. They keep doing. I'm not even sure how often they do this Atlanta Fed GDP now. It seems to be on every other day, but they're saying 3% GDP, so that's incredibly strong, and don't really see how you get a recession with 3% GDP. UK had their inflation figures for August, all in line sort of with expectations. 2.2% on headline and 3.6% on core. So guessing this is energy sort of making a fairly big difference, but yeah, core rising from 3.3 to 3.6 year on year. Not exactly great. And then you had obviously FOMC stuff, which we kind of covered. GDP, yeah, Atlanta Fed GDP now the day after 2.9%. How you can say GDP is sort of different one day later, I'm not really sure, but there you go. Guessing the inflation had sort of an effect on the Bank of England as well. They voted 8-1 in favour of leaving the rates the same. It was expected to be 7-2. Not that it sort of makes a huge difference, I suppose. People will see that as a little bit more hawkish, but it's an unchanged rate. This could all change next month. So we are now the same as the US at 5%. So pound has sort of strengthened on this quite a bit. And, well, the dollar weakening. US job numbers as well, still looking sort of reasonably good. You're not getting this massive layoffs. Continuing jobless claims down from last month, and initial jobless claims down as well. So people that were unemployed aren't going up. Some of them maybe are getting jobs, and initial every week are not going up as much as expected or previous month. So that's pretty good. Retail sales in the UK all very, very strong, way above expectations and above previous month. And the public sector net borrowing, the dreaded deficit, is slightly more than expected and quite a bit more than last month. I did sort of just have a check. It looks like we're at about 3.6% of GDP as a deficit, so we're not quite as worse as the US, which I believe are at about 6.3, 6.5, depending on sort of where you think interest rates will go. That's rather a lot of deficit, but we're at 3.6%. It's not great. And yeah, that was pretty much it for the news. So my losses in the portfolio have sort of largely come from here and the Interactive Brokers side, despite sort of gold at all-time highs. Equinox Gold and Coeur Mining both sort of came down ever so slightly. I think this is just, small moves really. We've got the rate cut sort of seeping in and further priced in. And yeah, as I say, gold at all-time highs, sort of silver looks like it's potentially pushing for another run. Could be a little bit of pullback in the short term, but it's all looking good to me. So yeah, happy with these positions. Clean Spark sort of come down slightly. Coeur Mining still my largest position now. Riot Platforms as well, sort of hanging around the $7, even at $63,000 Bitcoin, and yeah, sort of still got the REITs. Again, sort of potentially depending on prices, thinking about swapping those out for maybe some Hive Digital, because that is only a small position in here. The REITs, it looks like, have been going up in dollar terms. It's just the pound sort of strengthening has been holding these back. I think American Tower is is looking sort of fairly strong. Vici hasn't really risen all that much off the back of the rate cut. It's sort of near enough where it is. I think it's dropped ever so slightly, but then again the strengthening pound has sort of dropped this about £100, whereas American Tower is sort of near enough where it was. But yeah, there you go. On the Interactive Brokers side, so Pan American and KGHM both looking reasonably strong. 21.35 on Pan American, and sort of copper moving up reasonably, and silver as well. So KGHM back to 25% profit. So unsurprisingly, I have been piling more into the Interactive Brokers options, and yeah, down to 218 quid cash, so I need to top that up. That'll probably be from the Rio Tinto sales, although possibly from selling Baidu and Alibaba as well. I might sort of have a big push for the end of the month with, you know, rate cut here and sort of things potentially looking up. Equinox has sort of come down quite a bit. This is sort of all over the place. I don't think people really know where to place the options at the moment. But yeah, not been sort of buying any. It still, you know, looks a reasonable price. Coeur Mining has come down slightly. Again, sort of gold and silver look really strong to me. I think these can only go up sort of in the next few months. But I did buy a load of Hive, so I think this was at 305 contracts last week, and now 385. So have been buying an awful lot. It looks cheap to me. It looks slightly cheaper than Riot, so that's why I've been buying a little bit more. Although I have bought a fair amount of Riot as well, and I'm buying the sort of completely degenerate. These are $35. Strikes, so I'm sort of betting how much above $35 Riot goes. So while it's at 7, that is seen as fairly unlikely, but this is sort of by the end of next year or January 2026, so hopefully with a very healthy crypto bull market, this should look a reasonably good bet. Hymax sort of just coming down slightly, nothing too much there. Core Scientific as well, the other sort of potential one on the sell pile. I think people are maybe, I don't know, ignoring the extra dilution that this has still got to have. It's saying sort of, I think 3.8 or $3.6 billion market cap, but they have some extra dilution still to come. They're saying 410 million shares once sort of everything's claimed, so that gives it nearly a $5 billion market cap, and sort of compared to Riot, you know, Core Scientific have, I think, 20 exahash. Riot sort of should be way above that now. Core Scientific have no Bitcoin at all on the balance sheet because they have to sell sort of basically everything, where Riot have 10,000 Bitcoin. And yeah, Riot are at 2.2 billion market cap, so less than half of Core Scientific. All the extra in Core Scientific is this this AI deal, which, yeah, it's very nice, but it's sort of 350 million of revenue per year, fixed price. You know, if Bitcoin sort of triples, that 350 million is still 350 million. Or 325 million, whatever it was. But yeah, sort of, I'm not quite sure that there's over double the market cap of Riot in value there. So I may be keeping an eye on this and looking to sell as well. I know I keep saying that with sort of this Baidu. I've sort of got quite a bit on the sell pile at the moment, and sort of weighing up which to go first. So Baidu and Alibaba, Core Scientific, Glencore, the REITs, American Tower and Vici, and yeah, I did sell Rio, so that money will be going in. But yeah, it's a huge bet, and obviously if prices don't go my way, you know, a lot of this could pretty much go to zero. But it's a risk I see as worth taking. So we'll see. So leave your thoughts in the comments below, and if you guys have been buying anything bullish on the rate cut and sort of the next year, like and subscribe, and see you soon.